Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich. He's a director of research for digital assets at Forbes Crypto to discuss what's happening with the Ethereum Merge. Steven, it's great to see you as always. And of course, that's the big question on everyone's mind this week. But before we get into that, I want to get your thoughts around the impact of the CPI data. We saw what it did to the equity markets, and the digital asset space didn't really escape that either.
Right, and thanks, Jill, for having me once again. The numbers were upsetting and surprising to a lot of people. I had seen sort of consensus forecasts of 8.1% year-on-year inflation. They came in a bit higher at 8.3%, and one of the big reasons why that was surprising is because we've seen a big drop in energy prices. So this means that the heightened levels of inflation really dealt more with core categories as opposed to some of the more volatile ones like energy and food and so on and so forth. So naturally, that led to big sell-offs across all markets, crypto and equities, et cetera, especially in the riskier sectors. And Bitcoin fell about 10% to lead the market down. Ethereum dropped a little bit over 6%, and most of the major altcoins fell as well. And what this now does, it kind of turns a lot of attention to the FOMC's meeting next week, where now, according to kind of a widely tracked tool from the CME, analysts are now, I think consensus or the majority are still expecting a 75 basis point increase, but people are now putting 100 basis point increase on the table, which would be the highest since 1994. When the inflation came out last month, some were hoping that perhaps it would be a 50 as the Fed was starting to kind of perhaps wind down these escalatory increases, but that's certainly not going to happen. And it just kind of it's a good reminder again of just how hard it is to forecast these types of things. I mean, we looked to the 1970s, 1980s for how the Fed handled inflation then. There was the pandemic in 1918, but our economy today is so different from just this global nature, so on and so forth. That I mean, these forecasts, it's just such a difficult thing to do.
Yeah, I'm glad you pointed that out, because sometimes comparing other historical periods to what we're experiencing now, it's apples to oranges. I mean, our economy doesn't even look anything near what it looked like in that context. Let's talk about the Ethereum Merge. It's all we keep hearing about. We're seeing commercials about it all over on financial media, which is the first time I've really seen anything like that when it comes to the crypto space. So explain to us on a high level what the merge is and what's the impact to Ethereum.
Right, and I think Google even actually has a merge tracker on its website, because that kind of shows the impact that this is having as far as just general discourse. But the merge really is for Ethereum. It's been a widely expected, widely positioned sort of transition from a proof of work setup where Ethereum uses energy intensive computing equipment to process transactions to a much more energy efficient proof of stake setup where, as opposed to using these huge server farms to mine and process transactions, essentially users or nodes or validators will post Ethereum. The Ether is Ethereum's native asset, as collateral for the right to process transactions and earn rewards. And this is really just a kind of switching out of the engine of Ethereum from proof of work to proof of stake. It's scheduled to happen around midnight tonight. It's hard to know the exact time because it just depends on how quickly blocks get added to the blockchain before that happens. But there's a lot of excitement around it because, I mean, for one thing, it'll help alleviate any energy questions about, or any questions about Ethereum's energy or carbon footprint, which is a big issue, especially in Washington and other capitals around the world. But what it also does is it's going to set the table for a series of further updates in the subsequent years that are going to help make Ethereum much more scalable and just more efficient to sort of help support this entire ecosystem of decentralized applications, NFTs, tokens, et cetera, that are going to exist on top of it. One question that does come up a lot is, what is this going to mean for Ethereum's price, or Ether's price, especially now and then moving on into the future? Ether had been pumping over the last several months. I think it's up about 50% over the last few months or so. It obviously was impacted by the inflation numbers yesterday, excuse me. And it's kind of trading flat today. And I think that has a lot to do with just a lot of nervousness and uncertainty about what exactly is going to happen. The merge itself, it's not a foregone conclusion, although it does seem highly likely. There are things that can still go wrong. And one thing that's important to remember is that when this happens, the only thing that's going to change for Ethereum is that the way that transactions are added to the network is going to change. Nothing else is going to happen yet. It's in the coming months and years. That said, there is a high hope that the merge will actually make Ethereum, or Ether, excuse me, a deflationary asset, which could kind of help provided I guess, make it more valuable because it'll become a bit scarcer. The exact details of how that works are a bit technical. It has to do with how transactions are added, are burned and sort of added to the network. But there's a hope that based on the issuance schedule, which is expected to decline about 90% from this current proof of work setup, that Ether will become more deflationary.
How do you think miners are going to respond to this?
Ethereum miners, they have a few options. I mean, for one, they can shutter and just sell their equipment, which we are seeing some of them do, which is why prices for GPUs, for the computer chips, the brains of these mining activity of these miners, prices are dropping on the resale markets, and you're seeing that impact the shares of companies like Nvidia, for instance, where Ethereum miners, I think, accounted for about 30% of its revenue during the heyday of Ethereum miner. Others are transitioning to mine other blockchains where they can use that equipment. Some are like Ravencoin, Beam, Ethereum Classic, which actually is the original version of Ethereum before it was split during the DAO hack in 2016. That's seen a 300% increase in its hash rate or mining power on the network. But and then there also are some other miners that are looking to fork Ethereum and basically keep the same version of Ethereum without changing the engine. So there's a few different options out there, but they're all risky. I mean, for one, the fork itself, it's expected, I think, to go live in 24 hours after the merge, but there's a lot to be figured out. And those tokens would have to be listed because anyone who owns Ethereum, when that happens, would get a token for whatever fork there is, but the tokens would have to be listed. There would actually have to be a healthy ecosystem of developers and users, and I'm not seeing that yet. And then some of these miners switching to some of these other tokens, most of them don't have the capacity or the market caps to absorb all these miners and let them do it profitably. So it's difficult to be an Ethereum miner right now. I don't feel too sorry for them because this is well telegraphed. The shift from proof of work to proof of stake was in the original white paper. So this is not sudden, this is not news, but they are left with very few good options.
Yeah, it kind of always reminds me of, not that we want to compare historical context, as I mentioned before, but 1999 going into 2000. So I'm sure you're going to be pulling an all-nighter just to see exactly how this plays out. To wrap up here, Steven, do you think Bitcoin will switch to proof of work?
Yeah, so this is a question that comes up too, and I'm glad you raised it, Jill. I mean, the answer, frankly, is no. That would be sacrilege for most of the Bitcoiners out there. I mean, for a couple of reasons. One, they dispute allegations that Bitcoin is bad for the environment, or they highlight the growing levels of renewable energy that's being used to mine Bitcoin, although it's hard to come up with I guess, a universal figure or a universally accepted figure. And then they also will say that two other reasons. One, to the extent that there is a carbon footprint, they say it's worth it for the value created by Bitcoin. And three, they also highlight, a lot of people are arguing that proof of stake is more secure for the network than proof of work. Bitcoiners typically feel otherwise, and they don't see that happening anytime soon. So, excuse me, they feel otherwise, and they think that switching from proof of work to proof of stake would basically be devastating to the network. So I don't see that happening anytime soon.
All right, Steven, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.